Howard, that's a great point because, when we're talking about, there's a glowing point here around price increases. Not that it is the savior with all instances, but when you think about how, top line and bottom line is generated, and you think about, your number of customers, the frequency they buy, times, the price of the product, whatever, right? There's a very, very simple way, as you say, if you can establish the value that accelerates that. And you're pressing on the point about price increases. If you have the value proposition, is a great way, to top line and bottom line profitability.
Think about it this way. And for some reason, I can't remember the name of the bag I just bought. It's a backpack to take. And, I spent over $1,000.
Yeah.
Now, I can go to TJ Maxx or wherever and get like a $10, $15 backpack, right? But my perceived value is that's my briefcase.
Yeah.
And I got to look sharp when I go into the room. So they've sold me on the value of the craftsmanship of the product they sold me, because I was buying $100, $200 bags, and I was going through them every 18 months, 2 years. So I'm like $1,000, nothing, done, bought, right? So what's the difference between the company that made me believe their bag is worth $1,000 when I know I can go buy $15? So all of you sitting out there that are telling me, well, you don't understand our industry. There are certain industries, like if you sell Coca-Cola, I mean, you're stuck. But most industries, you have so much more room. The stuck is in your head.
Brilliant. Brilliant. And what many entrepreneurs, maybe struggle to understand is back to that equation of number of customers times the frequency they buy times price. But the number of customers and the frequency they buy is a volume equation. It's work. That doesn't just show up, to your point, at gross margin. It's everything below that in terms of labor productivity and everything that could be hidden liabilities to create that level of volume or frequency of buying. So if you're saying there's a perceived gap and you can increase prices, that's a far more streamlined way to top line and bottom line growth.
But I want to be careful here. So most people listening to this don't realize it, but you think incrementally.
Yeah.
So the problem with my 1+1+1 is it's an incremental thinking. The real questions that you need to ask of your leadership teams is, how do we get customers to pay double for exactly what we deliver today? What must happen for them to pay double? And you know as well as I do, the pricing of Activate Group has changed dramatically over the years. It's probably 4 times what it was 10 years ago. And we do essentially the same thing. You have to ask, how do you get to that point? The other thing is, and I can tell you a lot of organizations we work with in business services tell me today the customers that are paying them 4 and 5 times what they used to in the past for their same product and service are more engaged and excited about working with them, because there's a pride factor. And let's take law firms. I work with, what's a big law firm that you have a lot of respect for?
Greenberg Traurig, Fisher Phillips.
Right, Greenberg Traurig, all right? So yes, they can go find a good Harvard grad attorney that's got a small office, but there's a prestige and an expectation. I went to Greenberg. So wow, all right, I am going to get that much incremental value to help me help my organization. There's a pride factor in saying they work with Greenberg. Think about when you and I were in the accounting world. God, that was a long time ago for me. but
Even
when we were in public accounting,
even longer for me.
Well, listen, Richard, I was on stage a couple of weeks ago, and it came out of my mouth, and I didn't think about it. I'm like, I've been at business for 40 years.
Yeah.
I owned my first business when I was 18. 40 years. I'm like, that came out of my mouth. I can't believe I'm older than 40.
Same here.
But the reality was, it's when we were in public accounting, public companies came to, I work for KPMG, I forget the firm you work for. You work for
Coopers and
Pricewaterhouse.
Lybrand in the old days.
Coopers. There you
Yep.
go. All right. Well, we got to play with the customers we did because they needed that pedigree in the public market. So even if somebody small could afford to audit them with all the insurance, that didn't help them when they went out to get banking and all the other stuff. So the prestige, it plays a long way. So the question, that you want to ask as an organization, do we want to be something that everybody's proud of? And it seems like a luxury, but it's a must to work with us. And that's how we get price up.
Absolutely. Wonderful. Okay. Financial forecasting. There's obviously planning involved here, and it's crucial for strategic planning. So what tools or methodologies do you recommend for entrepreneurs to create realistic and effective financial forecasts that guide their growth initiatives?
You know what's crazy? You're gonna.
I
So,
know.
so companies have SAP softwares and all these really great models to help them do their budgeting and their
Yeah.
planning. And I want to scrap all of them. Excel. I just did this with a client. They couldn't get the handle on their business, and they did your traditional budgeting, so-called zero base. We'll zero base it, or we'll start where we left off last year, and we'll go for increases. What a hunk of junk, right? When you build Excel, all right, first of all, this is the only thing that I enjoyed that I really got value from being in finance and accounting. To build a model, you had to understand how the model worked, and you had to figure out which those 5 to 7 key drivers were. All the other numbers on the page got produced off of that, or really were distractions. How many pencils are we going to buy this week? What are we going to spend on office supplies? So what? All right. It really does not matter. We're going to get the controls on those lockers, and no one's going to walk home with pens. I'm going to say, so what? Wrong picture. All right. It may be lost money, but it's not where the big money is. All right. So to me, there was real value in building the model and have a model that drives off of these key drivers and then debating over the key drivers. The other thing that I want to say is your budget. Let's say you finish your budget on December 31st. It's usually irrelevant by January 2nd. Starting January 1, already things start happening different because you didn't have a crystal ball.
Yep.
But what doesn't change is the underlying assumptions. All the other little things moving around is actually a distraction. How well is the business moving along on those key, volume we're selling, volume we're moving, whatever it is that are the key drivers for you? How closely are we approximating those? And if we're off, why or why not? Do we need to make adjustments? Is it timing? Stuff like that. I believe first you got to get really good at predicting 12 months. And I roll out every single month. I finish a month and I roll out to, let's say we're now at the end of January. I now have a forecast out to the end of January next year. Because the more often you go back and you have to rethink about the key assumptions, the faster you start making changes. Because it starts becoming more obvious to you as to why you may or may not like your P&L versus budget. So I'm constantly reforecasting. I'm not saying don't use those other tools and they can automate, but there's something to be learned from good old-fashioned Excel. And I want people updating it every single month. And the other thing that I want everybody to be thinking about, I know I'm answering your question probably differently than what you wanted, Richard. I think I've been doing that the whole time. Forecasting is a leadership exercise, not a finance exercise.
Right.
And it really pisses me off that they'll put the finance team out in the back room and produce something for us, come out and we'll debate it. I want that going live in the room.
Yep.
Not the little individual expense line items and what we're going to pay Tammy next month. I want to talk about the drivers, and I want to fight over the drivers, and I want to talk about what's going to change. True story, back when I was head of strategy and all the planning writer system, time we were a $5 billion company, we got a new CEO and a new CFO. And they came in late in the process, which is really bad for a public company that is multi-divisional and, on different continents, right? So now they start like in the middle of September. Normally our budgets are done and a whole bunch of, so the whole sequence of events comes in. And so I remember the CEO asking me, and Corky was the CFO at the time, all right, so what should we do? We're late in the process, what we can do. I told him cancel everything. So now I get these deer in headlights look like, did I hear him correctly? What's going on? I said, yeah, cancel everything. And so Corky was kind of a character for a CFO, and he's like, please tell me what you mean. And he's got this big grin on his face, because I think he knew where I was going to go, because he already lived it. He had come from Coke Industries where, they did all these machinations. And the CEO was like, and he's like, but Howard, if I did that, you'd be out of a job. I said, great. I want you to put me in a job where I can actually have impact on this company. It's like, what do you mean? I said, you know what? Most organizations, they go through phenomenal amounts of detail, and definitely us, to get to precisely the wrong number. They're so busy managing spreadsheets that they don't have the conversations we need. And when these guys were there new, it's because we consistently did not hit our street numbers for years. And I said, there's a reason for that, because you guys are just doing financial mechanism, machinations, whatever the word is.
Yeah.
And you're not actually changing what needs to change. So they said, well, what would you do? I said, cancel all of those budgeting processes that we do, cancel all of the mechanisms, and let's just get the different divisions in a room and talk about what will be different and why. And then we want 2 to 3 key things that will be different during the year, that majorly different, not these incremental BS things. You tell me what those are. We're going to put a monetary value on them, and I will tell you what our numbers will be this year. The finance team, we had hundreds of finance people at Ryder, hundreds. I mean, it was crazy. All doing these different things in the divisions, all proud of their spreadsheets. And they were all upset because they still wanted to do their spreadsheets. So if you want to do that later, that's fine. We're not talking about any of that. I don't care what that says. I want to get everybody in the room, and we got in the room and talked about what would change by division. I then went in the back room and I calculated what the numbers were going to be. I was spot on, and then we hit the numbers that year, and they were far better than anything. And then the strategies that we implemented, because Corky really wanted us to not think incremental. So he basically said, how can we triple our profits in 3 years? This big Goliath company, he basically said, how are we going to triple it? That's what we talked about. That's what we implemented. So because we had that discussion, rather than the mechanisms of the forecasting is a consequence of those discussions.
Right. Yep.
Usually they create them in bubbles. They're not even connected, which is why we kept missing our numbers. Tell me what we're going to do different. I will then update and just carry forward last year with these changes, and we can predict the future. I want you to know that Ryder stock price was stuck in this $6 to $20 range for as long as I knew them. They went to close to 100 within the next several years because they didn't think incrementally. So when you're doing your forecasting and budgeting, I know you want to get it right and you need to have confidence, and it gives you confidence to hit your numbers, but stop thinking incrementally. That's what's getting you in trouble. You will get somewhere, but it will always be short. So I'd rather be talking about 10x rather than 2x.
So on that point, it's a great point. How do you reconcile that with, planning for, debt structure or the public markets, where you've got to provide guidance, you've got to manage to, servicing debt and so forth. So you tend to be a little bit more on the conservative side than the aggressive. What's your approach there, Howard, in terms of getting it right? Do you have various scenarios for different stakeholders, or how do you do it?
It's a good point. And I'm not telling people don't do your budgets and don't do your forecasts and all of that. The dialogue is more important. So what you have to realize is most people's budgets and their plans, if they're really honest, they're based on everything going exactly as planned.
Yeah.
And Richard, you and I know, I don't think I've ever had a year that even came close to what we thought was going to happen. There's just so many moving parts. It's impossible,
That's
right?
exactly right.
So the problem is that plan was based on everything going right. And by the way, most of our clients, when they blow out their numbers, they didn't plan on it. Some luck came along, and because we were making the right decisions, they were able to get a higher return on luck.
Mm-hmm.
But we equally have bad luck, and so our job is to minimize the bad luck. So typically what I do is, so that's my best case scenario. We don't give that to anybody. We just internally know that's our real benchmark of excellence. Then you've got to layer that down a notch and say, what's my likely case scenario?
Yeah.
So likely case now has to take into the realities of the past years of how far off you are from what you thought you could do. Or some of you are sandbaggers. So if you were always sandbagging, then you may be setting your company up to not grow anywhere near as capable of. But most CEOs are overly optimistic, to say the least. So I want to taper that down and I want to debate what's likely. So really likely should be some of us may have to likely be fired if we don't hit likely case. Some function really let us down if we don't hit likely case. I'm not saying you should be able to throw darts with a blindfold. It should be uncomfortable, but likely when we execute well. Then I have a yellow case, which is a few of those things still fell short, but I'm maybe not firing everybody. And then there's red where there, and actually I told you today, one of the CEOs I worked with just got me removed by his board. He severely missed his numbers twice, 2 years in a row. I didn't work with him for those 2 years, just to be for the record. Got in here late. But I won't say that I can't know that I would have changed that, but they missed severely for 2 years. If you severely miss for 2 years, usually it's the top guy. And definitely, if heads are not rolling because you miss severely, then you're just accepting mediocrity. Now, if you're missing severely because you're out in left field on what you can hit, that's different. So I use these different scenarios. When we went to the street, when I was at Ryder, it was our likely case scenario, which we blew away, which is why everybody was so happy. And we got really good at blowing away. Now, when you go out to the street or your investors or your board, you know, they're going to expect some stretch in there. They're not going to allow you to put something in there that you can trip over, but you better have a solid, really understanding of how you get there. And you better know the assumptions, because when you miss, you better be able to tell them which assumption you missed.
Back to the key drivers.
Back to the key drivers. So I will go to them and I will go out with likely case, and that's what I'm going to take to the banks, the markets, and all of that. But here's the other thing. You're not ready to go to those people unless you consistently meet your forecasts. You and I know that if you go out to have somebody, take a piece of your company, go to a bank. If you can show them, we consistently hit our numbers every quarter for the last 12 quarters. And then you show them a growth rate that on the surface seems high, but you consistently hit the last 12 months, they totally believe your numbers, and you're going to get a lower rate, a premium price, whatever. Now, if you look at the traditional people, if they're really honest, and they shared their history, they would be embarrassed. You need to be very good and solid as a team, and that's why it's a team exercise, and being able to predict what's coming. Quarter after quarter after quarter, which is why the CEO and CFO, it was time for them to go at Ryder. Quarter after quarter, it was disappointing.
Right. Let's talk about that, because that leads nicely into the next point about alignment of teams and financial goals. Howard, so how can entrepreneurs align their teams with financial goals to ensure everyone understands and contributes to the financial success of the business? And then part B of that is, what level of financial transparency should entrepreneurs think about in terms of financial information?
So there's three things that are coming to mind as you bring this up, and I'm going to take you off on a tangent here. So I have too many leaders that keep looking for that magic compensation program,
Yep.
a magic formula, and they keep screwing with bonus systems and all of that. And there's tons of research out there that there's little correlation between the plans and how people are compensated. And when it works, people always go back, well, we had the right alignment of compensation plans. And I'm going to say, I'm sorry, this is where I'm going to be a contrarian and call bullshit. Now, I'm not saying that I don't want to share back with everybody when we're successful and sprinkle the pixie dust. But at the end of the day, it's usually not the compensation programs that are going to cause the behaviors, and every compensation program has flaws. And then what everybody's doing is they're gaming the system for the compensation plan and not acting in the best balancing short and long-term interest of the organization. Enough cash today to be able to grow, fund, pay everybody well, but maximize growth. And most of them either encourage short-term or long-term. I've yet to see one that well balances both. And every time I'm told that it balances both, I don't see it. So for all of you those listening, I'm not saying don't have fair compensation plans. You need to do it to compete, to get the right people. That's not where your problem is. Your problem is everybody understanding how they contribute. So one of my favorite books on the planet is by Pat Lencioni. It's the four obsessions of extraordinary executives.
Yep.
The four pillars. One is building a cohesive team.
Yep.
Number two is clarity. Number three is over communicating clarity. All right. And then the last one is your human systems support the clarity. And if all of you listening to this honest, you have a lot of ambiguity in your organizations. There's confusion everywhere. I have a client right now, he's running around, and this is a billion-dollar valuation company, and they're creating 3x5 cards to make sure that every single person in the company understands what's expecting of them. And my challenge to CEO was, if you couldn't fit in on a 3x5 card, you haven't simplified it enough and they're going to fail. So on a 3x5 card, I want to know what they're accountable for, what the measures for success are, and that all should be linked up to what we're trying to accomplish as a company. Going back to Pat Lencioni's book, is there's not enough clarity. How are we going to win in the marketplace? I usually can go across the entire leadership team, ask that question one-on-one, and I will get a different answer. What is the crux of your business model that's most important? Most people answer it so vaguely, service. Oh my God, please. I'm not saying service isn't part of it. There's a component of something you do in service that's different than everybody else that allows you to get your unfair share of profit and growth. But I digress. But coming back, it's all about, first of all, every leader that's listening to this, you have to be a heat-seeking missile for confusion. Your job is to constantly find out where there's a gap between what you want and what you're seeing, or there's a gap between understandings, and constantly removing those gaps. See, the more clarity there is, the more likely the metrics will just happen. The reason the metrics aren't happening is a lot of times we're saying, all right, these are our 5 annual priorities, and then everything we talk about after that has nothing to do with those 5 annual priorities. It's all this little day-to-day noise that you're confusing people around how they align to not only make today, but make the future better, brighter, and easier. So for me, the number one thing is clarity. Then the other thing is take something like core values, something simple that we're supposed to create clarity around. Richard, and the organization that you're with right now, if I walked around and I asked every employee, without them being able to look at anything, what are the core values of the company? What percentage do you think would actually be able to recite them?
Certainly less than 50%.
Yeah, certainly less, right? So what is the odds are then people are automatically behaving in congruence with those core values? It's pure luck,
Yeah.
right? So if I know that our code is if everybody behaves this way, we're going to have higher retention. If everybody behaves this way, we're going to attract the best people. If everybody behaves this way and we have the people right, our customers are going to be super happy. You better be, you know, to the point where people can't believe you're talking about core values anymore. Because they have to, just like walking. Do you think when you walk about walking? No, you just walk. Do you think when we meditate, we think about breathing, but the rest of the time we just breathe? That's how they need to act your core values. So core values is just a piece of it, but it's a point. So this is something we put up on the walls. We say it's super important, that this is how we conduct ourselves, and then nobody knows it. So you have to be a heat-seeking missile for all those things like that, that if everybody understood it, management would get so easy.
Absolutely.
Growth would be so easy. And it's everywhere. And it's scary when you start becoming more aware of simple things. Like, a client, I did their quarterly meeting recently. The CEO couldn't believe when we did the key function flow map that no one in the room really understood their model.
Mm.
Something as simple as that, and this is a big company, simple as that, they were all incongruent on exactly how they made money. So now if the executive team doesn't understand that, there's no hope for the front lines. They're just wanderers. They're collecting a paycheck, right? So to me, the key is constantly figuring out what we need to clarify. So clarification, let's make this practical for everybody. Can you walk up to everybody in your company and ask them, what are the 2 or 3 things that you are accountable for? Why does your position, what is the mission of your position? What would not happen if you did not exist? And lastly, how do we measure success? The gap you will find between what the manager thinks and what the employee thinks, and both of them have great intentions, is shocking.
Yep.
So you need to get down to that level, and you're going to say that's a lot of work. Well, if you don't, then every person's going to come up tomorrow and make up their own story, their own expectations. And sometimes you'll be lucky and it just happened to align with your wishes. And then the rest of the time you're going to be disappointed because you didn't create clarity. So every person needs to know what's expected of them. We have to narrow our focus. What is most important? What are the, hopefully no more than 3 things we're going to elevate this year, so next year we have a better starting point. Everybody must know that, and you need to tell them how they contribute. But the other thing that we don't spend enough time on, that I'm now realizing, even me as an advisor, I need to take it 10x, is why.
Yes.
We ask a lot of things of people, and we know why we're asking them. They have no idea. So now it's just an action. When people understand meeting, they will actually make it better than what we were even thinking. Because now we've given them the power of, this is why we must do, which means this is what we must do. Now do everything you can to make that happen. Now all of a sudden I don't have robots, I have thinkers. But if they don't understand why, I'm not excited about going to work.
Yep.
Why do we have this process? Why do we have this step? Why do we have this control? Why do I have to report this back to you? And don't get upset when they ask. Encourage them to ask, because the more they understand why, the more they're going to come back to you with better ideas. Or the better they'll implement what you wanted them to implement, because now they're connecting action to purpose.
Absolutely. So Howard, on the, because I know business struggles with this, how open book do you believe businesses should be around their financial performance
So
across down the organization?
this is a hilarious concept. Now, I don't like the policy they're trying to run across America with, we should have an open book on what salaries every person makes. For me, that is so impractical and so um, uh, problematic that it would be very detrimental to society. So I don't think we should open up our books to the extent where every person knows what they make. But would you have any fun, Richard, if you went to a Heat game and there was no scoreboard and you just saw people running up and down the court? In the beginning, yeah, you like the slam dunk and what a cool pass, but you're pretty bored after about 15, 20 minutes. Because where is this madness leading, right? We need to know whether all the actions everybody's doing, whether we had a winning month, winning week, winning year, they need to know what winning looks like. And the more we can also put that down to KPIs, so their KPIs should directly towards that, but
Yep.
we should be proud and want everybody to know whether we're winning or not. So I believe we should have open books. And there's people like Jack Stack who created ESOPs, and everybody knows every nuance,
A great game of business.
right? Awesome book, right? And so what he learned was the more he informed people and they can understand cause and effect in terms of cost and benefit, they made better decisions on behalf of the company. And so they've got to know that making money matters, because if we're not making money, forget about raises. It ain't coming, right? And if we're making a lot of money, here's the biggest fear owners have on this. If they made how much, if they knew how much money I made, everybody would be running for a raise. That's no different than what's happening already today. I don't care what raise you give anybody, that now becomes their new floor and it's never enough, right? So you're not changing that dialogue. And by the way, no matter what you make, they always assume it's a lot more. Because most of them only they get a sense for what they think the revenues are of the company, and they don't understand all the cost implications all the way through. And then you may even be breaking even. They have no idea. And by the way, the worse results, the more I want everybody to know. Because when there's trouble, people pull together.
Yep.
They don't know there's trouble, then they're not going to have the same urgency as you. They're not going to have the same care as you. So I think the worse your numbers, even more so. But even when they're big and they're profitable, public companies have proved it. How much money does Google make? More than some countries. There's still a cap on what people can make. The market sets the rate of what people are worth. Contribution is what allows you to decide to pay more than your competition. When people contribute more, we can pay them more, period. We don't want them to feel like it's a piecemeal business, but at the end of the day, I got to get a certain amount of dollars back for every dollar I spent, right? But at some point, they can do all they want and go run around and say they want more because you make more. That's not their right. That was never in your contract. And be careful, because I see owners, particularly in middle market, tying compensation to bottom lines, and then they wind up with compensation plans that are far outside of what people are worth, and then go ahead and try to take them backwards.
Absolutely. And you said it
They'll be
many times.
furious.
Yeah. When you mentioned about labor productivity, we have to determine that labor is an investment, and there is an ROI. Back to how you started this conversation about labor productivity. So, all right, okay. I see where you stand on open book, and I agree wholeheartedly on that. Are there any other simple financial tools or financial coaching insights that you'd like to share?
Can I say one more thing?
Yeah, sure.
That open book thing. And it's about all the stuff we're talking about. And this ties back to this last question you asked me. Trust.
Yes.
So the more we shield people from things, the less they trust us, because the more we're saying we don't trust you. So anybody who manages other people knows that when trust goes down, speed slows down and cost goes up. So the more we are vulnerable with people, the more we're transparent with people, whether it's with numbers, problems, and all of that, the more trust we show in them, the more trust they show in us, and the faster we can move. So from a financial standpoint, listen, sharing information to people that has no meaning to them is probably a waste of time, right? Because they can't connect with you. Just say, well, did we win or not win? Did we hit our goals, not hit our goals? And a lot of times the numbers, they don't even really look at. But we do need people that have a line of sight.
Yeah.
But the other thing that I want to say about metrics from a philosophy standpoint, I think the most reasons why people avoid the subject is they're looking at it as a tool for just reward and penalty, and mostly for the penalty. Well, most people hate, which is why they agonize over budgets, which is why they agonize over any of the driver targets, is they're more worried about the penalty. But what everybody should be more concerned about and more focused on is the dialogue around the number.
Yep.
That's where all the value is. Did we like the number? Why or why not? Was it what maybe we hit our number, but now looking back, was our goal too low?
Yeah.
The dialogue with as a leadership team and with each individual in the organization is how you can help them be the best they can be. And all metrics does is put that under context. And there's qualitative and there's quantitative, but at the end of the day, quantitative doesn't lie.
Absolutely. Absolutely. Okay. Any other tools or insights on the financial side that you'd like to share?
The whole challenge I have on it is, everybody wants silver magic bullets and they want things that go across organization. So things like clearly forecasting, all of that, the stuff I shared today goes across all lines of business. But every business is situational. And so what I'll say is a lot of companies don't really have good reporting packages to really understand what's going on. And then they're static when they do create one. I would argue that every month and every quarter, you should be looking at new things because you're constantly dissecting the story to figure out where can the story be better? Where does the story not make sense? Where is there something that really, where are the elephants in the story that we need to talk about? And so what I would want to challenge you is to be thinking about every month and every quarter, what new information you want to see so you as a leadership team can really continually make the business better. And those combinations of decisions, I'm going to go back to the 10X. Really is thinking about not how do we just get a little better for next year, how do we make this so we can't believe how quickly we got to 10 times better.
Got it. Okay. The top three fatal mistakes that entrepreneurs make when it comes to understanding the leaks and wastage in their business.
Well, that's a tough top three reasons. Well, I'm going to say the first one is I am stunned how many leaders don't know their numbers, including the CEOs. They pick out little pieces of things like revenue that they like to see. They ignore the balance sheet. They ignore the rest of it. They think that understanding the numbers is finance's job. And so I think the number one pitfall is understanding the numbers is your job.
Yep.
And asking as many questions as possible. They're not stupid. There's no stupid question. So I think the number one pitfall is you really don't know your numbers. And so you're making really bad decisions because of it. The second mistake is only going an inch deep. So, I labor efficiency. So it's great. We calculate the top level and we decide how much we want to prove it. The opportunity is going in the layers and saying which function, if we made the most improvement, would have the biggest impact on the bottom line. And what do we need to do there to increase labor efficiency? and then go and drill into that department, then the next department, and even going functionally, figuring out all the different model issues that you have to keep exploring. The last one I'm going to go, and it's a repeat of what I said earlier, is you don't build businesses through financial statements. Financial statements show you the results of your decisions. I want you all, if you want better numbers, better cash flow, better everything, is constantly question your business model. And if your answer is, well, the whole rest of the industry is doing this, you're probably mediocre. The
Wow.
great businesses changed the paradigm of how the business model worked. Dell
Wow.
Computer was going to go bankrupt and is here today because they started collecting money up front. We have to constantly not ask, how is business done? How could it be done? And then how could we get there?
Wow. Brilliant, brilliant, brilliant. I love it. Okay. What is your parting advice, Howard, to entrepreneurs on how to grow profitably and maximize value for their business?
So I'm going to steal a Dan Sullivan-ism that I think is important. So the problem for all of us as entrepreneurs, and I've owned 9 companies and I've been involved in quite a bit over the years, is we tend to look at the horizon. And our eyes are always on the horizon. But here's the problem, is no matter how far you move, does the horizon ever get closer? It just keeps pushing out. So the challenge I'm going to put to all of you is many of you are making a lot more progress than you're giving credit to. And you're so busy looking at the horizon that you undo the decisions that are actually moving you very, very quickly because you're looking out there and you're not looking at how far did we come in 1 year? How far did we come in 1 quarter? And I'll finish one story. I have ownership in a software company. I met them a few years ago, and they had been stuck for 15 years between $3 and $5 million. Last year, this is our 3rd year together that we just finished. We did 25 million. We're going to do 50 million next year. And I was sitting with my partners and I'm like, folks, you look exhausted and miserable. Why? Oh my God, this is so hard. I said, do you realize in the last 90 days what you've accomplished? Do you realize how faster we're moving along in the equation, that it took you how many years to get to 5 million? And all of a sudden 25. This year we're easily going to do 50 million. But here's the thing, I challenge them. We have to keep finding the things that give us this huge impact, this mindset of to get a lot bigger, to make a lot more money. It's not putting in, if I want to be 10 times my size, 10 times my efforts. So we found one elephant and I challenged them. We need to go figure this out. The pricing model, the profit model in a segment that we're in sucks. It doesn't have to be that way. And we've come up with an idea that we believe can increase our profitability by 5 times this year. Now they just got to go and execute it. So by spending a few hours and executing that one idea, 5 times the profit in the same year. So I don't want you to be thinking that to grow a lot and to do a lot, it's about effort. Actually, I want to challenge you. How do I do half the effort and get along further faster?
Absolutely, Howard. And that's a simple decision framework, leveraging what you do well, how easy it is, and what's your risk and what's your reward. Now, do you have any questions that I should have asked that I didn't? Is there a question that I should have asked?
Richard, you and I have known each other for so many years now. We can talk for the next
Yes,
2 weeks nonstop to these folks and
we
share
can.
wisdom. Here's my challenge is I think we've given out too much already for people to apply. So what I'm going to say, my wisdom that I want to leave, because you didn't ask, I want you to pick, everyone that's listening to us, just one thing you're going to implement, because you're going to forget the rest of what you heard. The one thing that will have the biggest impact for you over the next 12 months, go and work on that. When you're done, I want you to come back and listen to this, because there's probably another 10 you could implement. then implement that, then come back and listen to this again. You don't need more. Implement what you were just told.
Brilliant. My God, Howard, I mean, not only you're a dear friend, you're my brother from another mother, obviously. Absolutely. And the years of coaching that you've enabled for me as a dear friend, I mean, I know that you're tremendous value to your client base, not only from an executive coaching, life coaching, business coaching, but also financial coaching. Just spells volume. So thank you for this. This has been tremendous.
So
I know.
Richard, you're not giving yourself enough credit. So,
No.
so what's ironic is you have been all the same things to me.
Oh,
You've been all the same things to every, company you've touched, every leader, any person that's ever worked for you is at such a higher level just because they've interacted with you. So everyone, he's a very humble human being, but he is the real deal.
thank you so much, Howard. And likewise, I ditto all of those sentiments to you, my dear friend. All the very best. This was fantastic. This is going to change lives and hopefully it has a multiplying effect with many businesses and the people who work with them as well. So thank you for that, Howard.
Thank you for having me.
All the very best to you. Bye bye.